Hey everyone, how are you? How are you? Guess I've got the wrong screen sharing. Hang on one second. Let me flip this screen over. Apologies, real quick. Get you the right stream. Okay, there we go. Sorry about that. So we basically had an inside day as projected, 54.40. We were pinned, and also we were pinned at this 54.60 SPX level, 1,000 points above the 44.60 short put. So they purchased a second short put above it to box the trade in. So it is a soft, what they call soft ceiling, because this pin for tomorrow, the 54.60 SPX, is tied to that OPEX expiration. I'm guessing all of this is speculation, but this was derived from the sell-off, the Sunday sell-off being so strong. Started the Friday before and then sold off Sunday, and the it was so strong, and the tariffs were such a big news story that they likely weren't, able to delta hedge this. So they may have gotten that secondary position at that time, short term. The reason I think it was the short term Thursday OPEX option also was because they brought it after we had the great breakout. Instead of keeping it above their short put here, they brought it back under. And so even though that's sort of like letting us know that it's tied to this pin, and sure enough, they have, the market has just flattened out. So my guess is that tomorrow will probably, or Wednesday or Thursday, will probably come down to the lower end of this and start, probing 5,300, 53.30 again, 53.20. And that would match the SPX 52.90. So, 53.25, 53.50, something like that. And then get ready to settle Thursday down here. Of course, if we break above this pin area at 54.60, then it's going to be very bullish. But since we're in a holiday week, we're going to not, think that the market's going to get that um, directional, and that we'll experience another flat trade day tomorrow and Thursday, is my guess, if I just had to have a guess. So very low key. The NQ totally flat, did the same thing as the yesterday, just stayed inside the ones. And very much the same picture for the Russell, inside the ones, and exactly the same for the YM, inside the ones. So even inside the inside, right? This is my 1 hour IB. Inside the 1 hour IB, inside the one, the daily one. So it's very, very algorithmic. And we can look at some higher time frames if you care to get a picture of where we might be um, over the next couple of days. So you can see here that the daily one returned all the way back inside the distribution and went below. The RVOL 3 is below the daily one, showing that just compressed volatility. For the weekly, we are inside the weekly ones as well, and well inside the weekly one range for this week. And so very, very small range. For the monthly, we have a bit of a situation here. We're sitting on this monthly too, and they are pinned between this upper monthly 1 and this lower monthly 3. So the 2 is sort of the balancing pin area. So we can get more price action next week when we come back from the Easter weekend. So here is your quarterly. You can see prices sitting right in between these quarterly twos, and it looks very similar to the monthly. Here's a quarterly one holding price at 55.30 with like a 90-day 3 you're sitting right on top of it. So there is, going to be a good chance for, that Sunday to come. What day is that? The 20th? And maybe get that forward, momentum on that breakout. We don't have any room for range expansion on the bottom. We've exceeded all of our ranges for the quarter, for the month. So we'll be going inside range. And they can go anywhere inside of it from the top to the bottom of that large, large range. So my initial guess is they'll break out to the upside because of all the positive news. We've gotten a lot of tariff deals. There's a lot of countries who have signed on, and there's a lot of companies that have, announced these magnificent, $100 million deals, $1 billion deals, and there's nothing negative about that at all. And like I've been, arguing on Twitter, it's like all we have to do is come up with the cost of production to pay these people more than what they would get in Bangladesh. And if we can't, come up to that standard with a low cost tariff to float that, then, you know, there's no reason to send supply chains all the way across the world just to make up that difference. You're making it up. You would absorb most of that anyway in shipping, back and forth. And it was just a stupid idea to begin with. Never should have done it. I was around when all of this was taking place. Most of this offshoring occurred in the early 2000 time period and the very early 2000s. And I remember when they started doing it because we had clients at my firm that were involved in this and setting up their manufacturing facilities overseas. And I just knew it was going to be a disaster. So, I mean, I had a really bad feeling about it then. And I was right. It is a disaster. So bring it back. Don't listen to all the people across the pond who are throwing up all this dust cloud about it. There's nothing bad about these tariffs. These other countries who are protesting so much, you should see the tariffs that they apply to the United States. It's ridiculous. I mean, some of these tariffs that EU is giving the United States are so outrageous. They're monopolizing our markets where we can't sell them products, but they can regulate, tax, and harass and, you know, shut down or censor or whatever it is, the game that they're playing. Plus, we give them 100 million a week in our liquidity swaps. And plus, they blew up our Federal Reserve account, going to zero with their TLRTO 3. Um, that allowed them to just fictionalize contracts. There was no business going on between 2019 and 2022 when they were rehypothecating all those agreements in the repo market. They were reusing the same contracts over and over and over and again and pretending like they were buying, getting credits for selling treasuries with it. And it was just, um, I'm sure, caused a lot of this questionable situation we have now with the fake Eurodollar market. There's nothing underneath it. There were no contracts. There was no collateral. There was no collateral for the treasuries. Um, and there was like probably a quadrillion because the multiplier was so great. They just like a Xerox copy, recopied the same agreement over and over and over and over to go back to the repo market all the time. So like one agreement could be rehypothecated like 500 times, and that would easily get you up to a quadrillion, quadrillion of just fiction money that had no underlying basis. So there's still a problem, a structural problem with the EU that needs to be addressed. Somebody should look into that and figure out, what's going on with all that. Why are we sending them $100 million a week still? The great financial crisis ended a long time ago, as did, the COVID, why are they still needing 100 million a week every week for the last 5 years? You know, it's a good question to ask. All right. While we're sitting here pondering things on a Tuesday, slow Tuesday, where we can get ourselves in trouble with nothing to do with the markets, but, think about all these crazy things that happen in the world. All right, so I'm going to let you go. This is it. I've got to go down to the tax office. That's why I'm doing this early and file my tax return. All right, y'all be good. We'll see you tomorrow morning. Take care.